pick the right stock at the right time.
Good morning. You're watching Daybreak on Bloomberg Quint Live with me, Alex Matthew. First, let me take you through the headlines. Asian markets are off to a weak start after stocks on Wall Street fell for the first time in 4 days. Fortis Healthcare receives a new bid from Radiant Lifecare, and after this, the board on Thursday formed an advisory panel to evaluate all the binding bids. TCS reports a steady fourth quarter. Management aims for a 10% dollar revenue growth in FY19, and the board announces a 1:1 bonus issue. Despite a dovish policy, minutes of the Monetary Policy Committee's meeting indicate a steady move towards a rate hike in the near term. And the NCLT asks the Committee of Creditors and Resolution Professional of Essar Steel to review their rejection of ArcelorMittal's and New Metal's bid to acquire the company. Let's turn to the US markets now, and technology stocks led a fall on Wall Street on Thursday, with the Nasdaq and S&P 500 falling for the first time in 3 days. Despite a muted start to trade in bonds, yields on the 10-year treasuries were at an 8-week high. Bloomberg's Abigail Doolittle sums up all the action on Wall Street in this report.
Stocks snapped a 3-day winning streak on Thursday, with the Dow, the S&P 500 and the Nasdaq all declining on the day by 0.3% or more. And it was the tech-heavy Nasdaq that underperformed the most, down by nearly 0.8%. This as compared to the S&P 500 down about 0.6%, and the Dow down the least, or again by a little more than 0.3%. Now, relative to sector composition, just 2 of the S&P 500's 11 sectors were higher on the day: financials and energy. Financials by quite a bit, by 1.5%. Energy was up just slightly, while the 9 other sectors declined on the day, led by the consumer staples, down more than 3%. Now, behind that big slide for the consumer staple space, Philip Morris down 16% for its worst day ever, going back to 2008. This on a sales miss amid a weak cigarette environment. And Altria and Constellation Brands traded down as well, while Procter & Gamble was another big drag on that sector. But the bigger sector drag overall in the markets for the declines was tech, down more than 1%, its worst day in almost 2 weeks. On Apple, that was one of the biggest drags, the biggest drag, falling 2.8%, its worst day in more than 2 months. This on cautious analyst comments, plus as Taiwan Semiconductor, an Apple supplier, gave disappointing guidance, which some analysts say has to do with the iPhone. In turn, other Apple suppliers fell, such as Skyworks, ON Semiconductor, and Qualcomm, causing the chip sector to decline 4.3%. And despite Haven bonds falling as well, the Bloomberg Dollar Index climbed by 0.5%, its best day since late March, suggesting some investors moved to the sidelines as stocks declined. In New York, Abigail Doolittle, Bloomberg News.
Well, that sell-off tone is predictably spread to Asia, and the early risers in Asia at least have opened in the red this morning. The Nikkei down as much as 0.3%. The Australian benchmark and the Kospi too were trading in the red. We'll see how China opens in just a short while, but before we do, let's turn to the Indian markets. Jayesh Khilnani and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Jayesh, first to you. What's on your list today?
Morning, Alex. Looking a little weak as far as the Indian markets are concerned. If you look at the SGX Nifty, that is trading in line with what global cues are indicating. Currently about 45 points lower and indicating a start below the 10,550 mark. So we'll have to wait and watch how the entire Asian trade actually pans out. But you know, as far as the ADRs are concerned, overnight we got mixed cues once again from the entire ADR space. You had Vedanta and Infosys, which led the way, 1% and 2% respectively. We had Wipro and HDFC Bank, which also managed to close in the green. As far as the losers are concerned on the ADR, we had Tata Motors, which lost nearly 2%, and ICICI Bank and Reddy's also closed lower for the day. Now, if you look at the commodity space, crude is actually trading soft. So you can look at absolutely flat WTI near the 68.30 mark, and Brent is actually trading above the 73.50 mark. Now, if you look at the base metal space, that is where we got the major cues. Most of the base metals, or in fact the entire screen, if you look at it, it's currently trading in red. What happened to the base metals was that they snapped their losing streak, specifically aluminium, which closed about 2% lower. We had zinc, nickel and lead, which also declined in trade more than 1% each. And if you look at the Shanghai Futures Exchange, you can see that the fall is largely led by aluminium, which is trading about 1.8% negative. As far as gold prices are concerned, we have seen some bit of stability come about between the range of 1340 to 1350 for an ounce of gold. Now let's have a look at the fund flows that we got. Once again, the FIIs were net sellers of about 625 crores. Remember, this is the 5th consecutive day that they have been net sellers as far as the provisional numbers are concerned on the exchange. While the domestic institutions, they bought nearly 450 crores worth of equity. For the month, the trend actually continues. FIIs have sold about 3,276 crores, while the DIIs have bought nearly 5,500 crores. Now let's have a look at some of the key indices that we have. So the Nifty index that closed about 40 points higher, but largely last couple of days, Alex, has been range bound. We had the day before yesterday that we declined in trade, and yesterday we gained an equivalent amount. But the real action came about in the last hour and a half, where the mid cap and the small cap index actually surged. So 0.7% for the mid cap index, and small cap index surged as much as 0.6%. As far as the gainers were concerned, yesterday was predominantly metals all the way. The index itself surged about 5% and we had the Nifty IT index ahead of the TCS results yesterday, which gained as much as 1.14%. Now, if you look at the losers, there was only one index which actually declined in trade. That was the Nifty Energy Index, ended about 0.4% in the red, largely led by the 3 oil marketing companies. As far as the VIX is concerned, we saw a sell-off in the VIX to the tune of about 2.6%. Now, if you look at the contribution space, what led to the 39-40 point gain that we saw for the Nifty was largely led by the commodity names Vedanta and Hindalco. L&T and ITC also managed to eke out gains for themselves, while we had the oil marketing companies which declined in trade, and we had Titan and the others which actually contributed to the fall of the Nifty, but eventually ended about 40 points higher. But Agam, what are you picking up from the F&O space?
Well, again, what we've really seen, Jayesh, is that the Nifty has moved and advanced, and we've seen it move about the mark of, should I say 10,550. But the truth is that we're still looking at some amount of consolidation coming along, and we aren't really looking too much change with respect to open interest, at least in the futures. When it comes to the Nifty Bank 2, and the way things have panned out, very little change there. And coming down to your India volatility index, that continues to fall, and now it's gone below the mark of 14. And on the other hand, where the Nifty put call ratio is largely stuck between that range of around 1.6, or rather 1.59 to around 1.65. Moving in with respect to changes in open interest, again, because of the fact that it was expiry of the weekly options yesterday, we did see turnovers increase, but we also saw more writing on the Nifty options at around the 10,500 put, and this is actually a positive sign for those who are long on the index. That said, well, in terms of futures, we have Ram Puccini, which moves back into the F&O band, and we have plenty of stocks which were up and about. So Nalco, of course, on the back of aluminium prices, saw a lot of fresh longs building in. We saw further strength in V-Guard, and on the losing end, of course, no surprises for guessing, a lot of weakness coming in for BPCL, where the stock declined by as much as nearly 7%. It was a top loser on the Nifty yesterday, and open interest accumulation of 18% towards shorts. So once again, all eyes will continue to be on the OMCs, but perhaps also today it'll be on the information technology sector, especially given TCS is out with steady earnings as well as announcing a bonus.
All right, thanks so much for that, Agam. On to the race for Fortis Healthcare, facing the prospect of 4 or perhaps more simultaneous bidders and restive foreign shareholders. The Fortis board has approved the formation of an advisory committee to evaluate bids for its healthcare and diagnostics businesses. Yatin Mota gets us all the details in this report.
We have the Fortis management and the board finally approving, evaluating binding bids which have come so far. The board also approved forming of expert independent committee to evaluate these bids. Of course, they also have appointed the Standard Chartered as an investment banker, which will be assisting and advising the independent committee. And also the board will meet on April 26th to take further action and evaluation. Remember, we also have shareholders which have called for an EGM regarding removal of 4 directors which are there in Fortis Healthcare currently. Also, Fortis spoke with Bloomberg Quint. They said that Eastbridge remains a valuable shareholder and their concerns will be taken up regarding removal of directors and also calling for an EGM for the same purpose. Also, they say that they are establishing a process only to evaluate the binding bids. So the non-binding bids are not under the evaluation or consideration of the board. And also the management assured and told Bloomberg Quint that they will take decisions which are in the best interest of the minority shareholders.
All right, and to add another twist to the aggressive bidding story, KKR-backed Radiant Lifecare has submitted an unsolicited, non-binding expression of interest for Fortis at a price of 165 rupees per share. And the bid is higher than all the 4 previous bids from Manipal, IHH, Fosun and the Munjal and Berman family. Now, Radiant proposes to demerge the Fortis Hospital business, excluding SRL, into a new company. Of course, more details on that will be available very shortly on the website, so you can check out all of the details there in the story that we put up on the website. Of course, that's from notice to the stock exchanges. Let's move on now and take a check on the rupee and the bond market. Saloni Dhanuka joins us on the show. Saloni, morning.
Good morning, Alex. So the rupee yesterday continued its losing streak for the 4th consecutive session to end at near 13-month low of 65.80 levels against the dollar. Now, this is on the back of growing worries over higher crude oil prices, and likely fiscal slippages has largely led to subdued forex market sentiments. Now, remember, the domestic unit has weakened almost 60 paise against the dollar in this week. Well, speaking of the bond market, sovereign bonds declined yesterday as benchmark 10-year yield closed at its highest level in more than a month at 7.63%. Well, in terms of flows into debt market, global funds reduced their rupee debt holdings for the 5th consecutive session yesterday. They reduced their debt portfolio in the tune of 1,660 crores according to NSDL data. Well, on the global front, dollar index ended higher for the 3rd consecutive session, and it now trades steady near 89.95 levels, which is well below the crucial 90 mark. Elsewhere, pound declined yesterday to near a 2-week low against the dollar after Bank of England Governor Mark Carney stated that any interest rate hikes by the bank will be gradual and Brexit could delay a rate hike by the bank. And lastly, speaking of dollar rupee, now it is trading 30 paise weaker at 66.21 levels against the dollar in the non-deliverable forward market, which indicates a weak opening for Indian rupee in today's trade, Alex.
Thanks for that, Saloni. Now, on to one of the big updates from last evening. The minutes of the Monetary Policy Committee meet indicate a move towards a rate hike. 2 members of the MPC, that's Deputy Governor Viral Acharya and RBI Executive Director Michael Patra, have batted for tightening the rates. Ira Dugal sums up the key takeaways from those minutes in this report.
The minutes of the Monetary Policy Committee meeting showed that the 6-member committee is split into 3 buckets. The first bucket was those in favor of a tighter monetary policy stance. That bucket still so far held only Michael Patra, who had voted for a hike in interest rates in the February and in the April policy. Viral Acharya, the minutes show, is leaning in that direction. He, of course, voted for a status quo in the April policy, but he has given a clear indication that he is likely to vote for, quote-unquote, withdrawal of accommodation in the next policy, which comes up in June. The reason he gives is twofold. One, he was watching to see whether the shale gas supply response to higher oil prices allows oil prices to remain below a certain level. He now is not sure that that will be the case because inventories are falling, so he does see elevated risk from higher global oil prices. The second thing he was watching for in the February policy was the economic recovery domestically to see how strong it was. He now believes that there is a fair amount of momentum in the domestic economy. So keeping those 2 factors in mind and the need to reinforce the credibility of the inflation targeting regime, Viral Acharya said that he will likely vote for a withdrawal of accommodation in the June policy. That would make 2 people voting at least for a change in stance, if not a change in interest rates. Michael Patra, of course, continued to vote vote for a higher rate, and he did say that core inflation remains his key worry. He believes that core inflation pressures would mean that you will see headline inflation remain above the 4% mark. 4% is the midpoint of the MPC's inflation target, and Michael Patra does believe that in order to achieve that, in order to reinforce the credibility of the mechanism, you need to take some policy action. So that's the rate hike, or at least tighter monetary policy camp. Then there is the next one. This is the wait and watch camp, but those who seem like they're leaning a little bit towards tighter monetary policy, and Governor Urjit Patel falls in that. Now, he was very watchful with his words, so he didn't give any clear indication of which way he's leaning, but he did talk about the upside risk to inflation, and unlike in the February policy when he said that the economic recovery remains nascent, in the April policy minutes he does not use that word. So perhaps he too is starting to get a bit more comfortable in the economic recovery, and then will start focusing on inflation. Chetan Ghate, who's an external member, gave out a long analysis citing his own research suggesting that the higher MSP could lead to higher inflation over almost a 6-7 quarter period, and it could feed into generalized inflation. That, together with the higher global oil prices, he thinks could add a structural element to the upside risk to inflation. So he also seems like he's a little bit more worried on that count, but they're still in the flashing orange bucket, if we can call it that. Then other two members, Pami Dua and Ravindra Dholakia, they are also in the wait and watch camp, but they seem to be leaning towards a delayed interest rate hike trajectory, because Ravindra Dholakia in the minute said that he believes that they will make the 4% inflation target within the next 12 months, and Pami Dua said that the economic recovery remains lackluster. All in all, the tone of the minutes was a little tougher on inflation than the monetary policy itself had suggested, because remember, the policy actually had cut the inflation target, which led a lot of people to believe that there will be a prolonged pause on interest rates. Does that remain the case? The bond market's verdict on Friday will be important.
All right, with that, let's shift to the currency, shift to the commodity market. Jayesh Kinlani has all the details there. Jayesh, what do you have for us?
Morning, Alex. Let me start off with the base metal space. So, we saw that all of the base metals, in fact, declined on the London Metal Exchange, led by aluminium, which declined for the first time in the last 4 days. Now, it is speculated that Russia will likely to come into aid company Rusal and ease the supply concerns that we have been witnessing for the last week or so. Also, we understand, as per a Bloomberg survey, that copper bets, those have actually surged to the highest level on the long side since at least 2015. So, we'll have to wait and watch how the entire copper trade actually plays out. So, we had zinc, nickel and lead, which declined more than 1% in trade, and aluminium declined as much as 2%. Now, if you look at the Shanghai Futures Exchange, most of these base metals have in fact traded, started on a weak note, led by aluminium, which is currently down about 2%. Now, as far as the oil markets are concerned, we saw that oil prices are currently trading absolutely flat, and we also understand that it is said that OPEC has likely accomplished the supply-demand glut that they wanted to stop. Now, also, the meeting in Saudi Arabia that we were tracking, we understand that the global oil surplus has shrank to its lowest level in about 5 years, and the demand supply situation that could ease out since by June this year. So that's what we are picking up from the oil markets. As far as precious metals are concerned, largely stable for gold between the 1340 and the 1350 mark.
Thanks for that, Jayesh. Now, the two IT heavyweights have come out with their fourth quarter numbers, and while Infosys managed to meet estimates, TCS may have just taken it a notch higher by growing across all regions and verticals. Now, what's key from that is the relative guidance for this current financial year and how it's going to pan out, and that's most important. Agam Vakil is here with a comparison of the two. Agam, how is it going to pan out for these two companies?
Well, Alex, we know that TCS has posted a very good set of numbers when it comes to the fourth quarter. And the real question is, has it done better than Infosys? Well, it certainly appears so. Let's start off with the revenues. Well, in terms of dollar revenue growth, you can see it's pipped Infosys up 3.9%. Even in constant currency terms, much stronger than Infosys at around 2%. Moving in, let's also talk about some of the other factors, such as your, digital contribution. And that's where both TCS and Infosys are head-to-head with their digital revenues coming in as contribution coming to around 24 to 25%. But moving in terms of operating margins, how has TCS done? Infosys has seen more expansion, not only on a sequential basis, but also on a year-on-year basis in comparison to TCS, albeit TCS has slightly higher margins in comparison to Infosys. But the question really was, and perhaps the more important question was, what is the outlook for FY19, and would TCS temper its targeted margins? No, they did not. They held on and they said that they are still looking to target 26 to 28%. On the other hand, we saw the Infosys actually wind down its margins guidance to around 22 to 24% from 23 to 25%. So once again, TCS scores in this case. Moving in, let's also take a look at how their key verticals have done, and once again you will see that TCS has done much better in financial services, and this is the bulk of their revenues both for Infosys as well as TCS, in manufacturing as well as retail. And TCS has indicated that retail is turning a corner and it is now started to show some consistency in growth going in. Coming down to geographical client geographies, once again, considering 80% of your revenues for both Infy and TCS come from just North America and Europe, TCS and Infy both have done subdued business in North America. But on the other hand, the reason why we are looking at strength in TCS's numbers in this quarter is Europe, specifically United Kingdom, which saw about 6.3% growth, and Europe at around 4.5% growth. Do remember, this is in constant currencies. Infosys has, been largely flat sequentially. And that's also another reason why we're looking at that, number coming in. The real question is, how do these companies now stack up with in terms of valuations? After looking at these numbers, I don't think there is too much doubt as to the reason why TCS is more expensive than Infosys at 21 times in comparison to Infosys 16 times. However, what is also perhaps confusing or perplexing is that the analyst rating on TCS is much lower than Infosys, which means that analysts prefer Infosys right now, and they also see a return potential of as much as 9% from current levels. And on the other hand, for TCS, they actually expect TCS to correct by as much as 4%. I'm not sure that's going to come out in today's day of trade, considering we can see a sentiment boost because of the bonus. But on the whole, this is how things are stacked up, and maybe we could expect a little change in analyst ratings eventually as we move into today's day of trade. That said, let's also listen into as to what the management had to say about the earnings as well as the outlook for FY19.
If it was to be 6% as the new normal, it would be a very boring job. So we are committed to going on the 10% trajectory. In Q3, we were around 6. Q4, our year-on-year constant currency growth is 7.2. As I said, the dollar growth is 11.7. We are committed to try and get it up to that double-digit growth, and that's where the entire focus is. Capital allocation, we have always said that we've been, if you look at our history, we've always believed that about 80 to 100% should be the distribution. This year, that is, it depends on whether you look at it as a financial year or a calendar year. We have distributed 100%. We generated free cash flow of about 26,500 crores. Between dividend and share buyback, we have distributed about 26,500 crores. We expect a similar kind of 100% distribution going forward also.
If you look at last year, we have been in that range of around 25%. Our aspiration is to do higher than that. With regard to investments to be making into digital, we have been, in the last 3 to 4 years, we have been making those, and we'll continue to make those. And whatever the stability, etc., you have seen in the margins is on the back of some of those investments. So we don't see anything extraordinary about that.
I would say incrementally, we are now more confident about BFS North America than we have been in the recent past, though the revenues have still not started flowing in. Okay. But early client discussions show that there is not much of stress left in the system. And we hope that that will translate into better spend through the course of this year. Okay. But I think Q2 will be a good quarter or Q1, our financial Q1 and their calendar Q2 will be a good quarter to validate that.
All right, Shraddha Babla is here now with the stocks in news. Shraddha, what are the stocks on your list today?
A couple of earnings, Alex, starting off with Reliance Power, where revenues fell by about 2%, but EBITDA rose by about 2%. EBITDA margins also came in about 120 basis points stronger, and the net profit grew by about 16%. A very strong set of numbers coming in from Mahindra CIE Auto, where revenues grew by 32%, net profit more than doubled to 38 crores, EBITDA jumped by 70%, and margins also saw a significant bump up from 9.5% to 12.2%. So good numbers there. However, it was a mixed quarter as far as Cyient was concerned. Revenues came in above estimates, but there was a marginal miss as far as margins are concerned. So revenues grew by 8%, net profit was up by a strong 34%, but margins came in at 11% versus 11.4%. That apart, you also have CCI cutting penalties on dry cell battery makers. So they've lowered the penalty on Eveready Industries and Indo National Limited, both of which are listed, by 30% and 20% to 172 crores and 42 crores. Now remember, this penalty was imposed for cartelization in respect of zinc carbon dry cell batteries, and Panasonic Energy India, again, which is a listed entity, was spared on account of its cooperation in the case. So watch out for all those three battery makers. That apart, you also have an ET report which says that Schneider Temasek Consortium may announce a deal by the month end to buy L&T's electric and automation business, but that will be at a revised down valuation of between 13 to 15,000 crores. So watch out, keep an eye out for L&T. Another ET report which says that Birlas are looking to sell up to 20% in Idea's payments bank to raise up to 200 crores. So IDEA will be on focus, on the back of this development. And also Aditya Birla Nuvo, which holds about 49% stake in the payments bank, which has been merged into Grasim now. So watch out for Grasim as well. JB Chemicals is another one. They have received an order from the Pollution Control Board directing closure of the formulation facility at Daman. It does contribute a sizable bit of the revenue. So this is a negative development for them. Indian Metal and Ferro Alloys has received a total of 123 crore demand notices for alleged excessive mining. So watch out for that name. Negative development there. And on the back of bulk deals, we're tracking Hathway Cables, where Kenneth Andrade's Old Bridge Capital Management has checked into this stock and bought about 2% stake yesterday, whereas Morgan Stanley Asia has sold 2.2% stake. Also Uniply Industries, where Malabar India Fund bought 6% stake in a bulk deal yesterday, whereas promoter Keshav Kantamneni sold about 6.1% stake out of the 29% that he held, and as of 31st December. So all of these to keep an eye out for, Alex.
Thanks for that, Shraddha. Now, of course, there's lots to talk about over the course of the day, including live market action, and you'll find all of that right here on Bloomberg Quint Live. There are also several stories on the website that you can find and read. First up, the Supreme Court on Thursday has allowed the Sahara Group to sell part of its Ambi Valley property to raise money in order to refund investors. And telecom major Bharti Airtel is in advanced talks with video streaming giant Netflix to offer free access to Airtel TV app users. Well, that's all we have for you in this edition of Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.